Hi guys, this is Erica from Gokce Capital. Now before I begin, be sure to click subscribe and turn on the notification bell. Born amid the flat open fields of Iowa, the instant T.J. Starker arrived in Oregon, he fell in love with trees. His father, the son of a German baker, particularly gifted at bending pretzels, had moved to Portland, Oregon in 1905 to build homes for the growing city. Like many visionaries, TJ was fortunate to encounter his love at a time when it was just becoming the subject of academic and business interest. The National Forest Service was established the same year TJ moved to Portland, as was the new discipline of forestry, and TJ took to this study like a fish to water. He became one of the first 4 forestry graduates at Oregon State University, and would also be one of the first foresters to realize the value of second-growth forests and the importance of regenerating cleared forest land. But for all of his contributions to the timber industry and rural Northwest, TJ is perhaps best known for something that is more typically associated with bigwig urban developers and investors, the 1031 exchange. We'll learn more about how TJ helped invent the modern exchange later. But first, if you are looking at selling an investment property, you may want to consider the 1031 exchange yourself. So in today's video, we're going to cover the top things you should know. Number 1, 1031 exchanges allow owners of investment property to defer federal taxes on some exchanges of real estate. A 1031 exchange is used by investors who are selling one property and reinvesting the proceeds in one or more other properties. Number 2, there are rules for using a 1031 exchange. The real estate purchased with the proceeds must be like-kind. More on this later. The real estate being both sold and purchased must be for investment purposes. Property used as a personal residence won't qualify. Also, when you are using a 1031 exchange, taxes must still be paid on any boot. And as a note here, a boot is an addition of value to the swap that is not real estate. So it is any sort of personal property that is being sold with the real estate. A 1031 exchange also has certain strict time frames. Once a business or investment property is sold, a new property or properties must be identified within 45 days and acquired within 180 days. In addition, although I've been speaking of the transaction as if it is a sale and a later purchase, properties that are bought and sold using a 1031 exchange are not actually considered a sale per the IRS. Rather, they are a swap. Part of what this means is that you cannot buy and sell the properties directly. You must exchange them through a qualified intermediary. And more on this later. Number 3. The term like-kind property refers to 2 real estate assets of a similar nature, regardless of grade or quality. Now, this is not actually as restrictive as it would sound. The Internal Revenue Code defines a like-kind property as any held for investment, trade, or business purposes. Therefore, you can swap different kinds of real estate and still have them be considered like-kind. For example, you can sell a rental property and use the proceeds to purchase commercial real estate. Number 4, undeveloped land can qualify for a 1031 exchange. There is one caveat here, however. If you are planning to buy a vacant lot through a 1031 exchange to develop it and sell the new properties, then it would not be eligible. The IRS deems this kind of activity intent to sell, not an investment. Number 5, agricultural land is typically eligible as well, but there are a few caveats. The farmland being traded in a 1031 exchange cannot be your primary residence, or you cannot plan to use it as your primary residence. Any personal property, including farm equipment, livestock, and machinery, would be considered boot, and either it cannot be included or you must pay taxes on the sale of this property. Number 6, you can also exchange a property if it has a mortgage on it. If this is the case, however, then there's a financing requirement that you will have to meet on the replacement property as well. So this is to say you're required to carry as much debt or more on your replacement property as you had on your original. Number 7, certain properties do not qualify for 1031 exchanges. As we mentioned earlier on the vacant land example, property held primarily for sale will not qualify. Examples include, again, land that is going to be developed or buildings that you plan to fix up and resell. Property that involves stocks, bonds, notes, securities, and interests in a partnership cannot be included. And primary residents, again, are not eligible. Number 8. To get started in a 1031 exchange, call your exchange facilitator. As we mentioned earlier, a 1031 exchange has to happen through a qualified intermediary. You cannot do it on your own. So if you have a property that you want to swap through a 1031 exchange, the first step is to find the facilitator. And the best place to get a recommendation is from attorneys, CPAs, escrow companies, or real estate agents that are familiar with 1031 exchanges. And I'll make one last note here. As of the time of this video recording, there is some talk about restricting which properties are eligible for 1031 exchanges. So before you engage in a 1031 exchange, also make sure that you speak with a real estate attorney and CPA to ensure that your property is eligible. But let's return to T.J. Starker and the creation of the 1031 exchange. In 1967, at the height of his career as a timberland owner and manager, T.J. made a deal with Crown Zellerbach Corporation. He would convey to the Crown Corporation 1,843 acres of timberland. In exchange, Crown would find and convey to him property of similar value within 5 years. And Crown made good on its promise. Over the next 2 years, Crown identified and purchased 12 parcels that together equaled the exact amount Crown owed to Starker for the exchange. But here was the problem. When Starker filed his income tax return in 1967, the year he conveyed his timberland, Starker reported $0 in capital gains, claiming the transaction was a tax-exempt exchange. The IRS disagreed. It stated that such an exchange only exists when the swap is simultaneous. TJ was sent a bill for deferred taxes, which he did pay, but then sued for a refund in the federal tax court. Now, the case was complicated by the fact that TJ's son and daughter-in-law had also been partial owners in the property, and thus were parties to the same transaction. They were in a similar bind with the IRS and also sued for a refund in a separate case. The court ruled in their favor. However, when the court came to TJ's case, it reversed its previous ruling. Part of the reason this happened was that TJ's case was more complex, causing the judge to revisit his previous ruling. Not only did TJ receive 12 properties for the one he sold, but he also asked that 2 of the properties be deeded to his daughter, not himself. In addition, as part of the contract, Crown had promised to grow the value of the property that they were to convey to TJ by 6% each year to account for the growth of the trees on the timberland TJ had conveyed to them. After the tax court ruled that TJ was not entitled to a refund, he appealed to the Court of Appeals. In the end, the Court of Appeals ruled, for the most part, in TJ's favor. The exchange, even though it occurred over several years, did count as a 1031 exchange. However, he would have to pay income taxes on the 6% growth factor. This ruling set the precedent that taxpayers could perform an exchange of property over a number of years, which in turn prompted the Department of Treasury to pass new legislation enacting the strict timeframes we have today. Yet the most interesting part of the story is not so much the dry facts of a historical court case, but the story of TJ himself, the grandson of immigrants and the son of a simple laborer who followed his love of the land and the natural world to build a successful business while also championing sustainability in the field of timber. And if he can do it, so can you. Now, do you have any stories about 1031 exchanges? Let us know in the comments. Did you like this video? You're going to love our Gokce Land Due Diligence program. We'll make you a land due diligence expert in just 7 days. Check it out at gokcecapital.com/glad. And while you're at our website, don't forget to explore our $1 down listings at gokcecapital.com/listings. Finally, don't hesitate to reach out. You can email, call, or text, and we will respond as soon as possible. So thank you for listening, and more to come.